has all of the answers for you. Let's take a look.
First of all, tell me your title there with Ben's group.
Senior Wealth Advisor.
Okay. How long have you been there?
9 years.
Very nice. Very nice. All right, so let's get started right away. For our viewers who are just seeing the headlines or not sure really what's going on, can you explain the run-up of these stocks, I'm calling meme stocks, why they're skyrocketing to such massive levels when these aren't exactly, the best companies to be investing in from a revenue standpoint?
Right. So the move in these stock prices the last couple of days has nothing to do with their earnings or the fundamentals, and everything to do with their popularity and day trading. So you had a group of Reddit users, just think of as average Joes, who were deciding to target certain companies that had a large amount of short exposure, meaning there were hedge funds somewhere that were betting against the stock. And so there's a coordinated effort by these Reddit users to buy and to try and overwhelm the amount of buying interest so that these hedge funds with short positions would ultimately feel obligated to restrict their losses and therefore lose money.
Is this a message from, the little guy to say, hey, you hedge funds, you big dogs want to bet against these stocks? We're going to take money out of your pocket.
It's being perceived that way. I think it's being reported that way. And I think there is something to that as far as the original intent goes of the Reddit users. And of course, it makes for a good headline that a bunch of average Joes are trying to knock down some Wall Street hedge funds, and some of these fat cats are going to take one on the chin. I think it's important to note that the specific companies really are not all that significant in this case, meaning I think they were targeted because there was a lot of short interest in them, meaning there were hedge funds and other people betting against them. But that just means that it makes it easier for the stock to go up if those investors that have short positions end up covering those, right? Because if they have to buy back the stock, that's going to increase the demand. So I think that's the reason that GameStop and some of the others were targeted. But it's kind of interesting, when you look at things from an investment perspective, as professionals do, to see stocks move that fast when it has nothing to do with the underlying fundamentals is certainly unusual.
So what do you think the message that this is sending about how easy it can be to manipulate stocks and transfer billions of dollars between people in just a few hours?
Yeah, I think to some extent that's always the case when it comes to the stock market. Even if you only see the trading price or the share price on a certain stock tick up or down, a dollar or two in a certain day, because there are billions and billions or trillions of dollars in some cases being exchanged, there's always a lot of wealth created or lost. This gets more attention because of the source of these Reddit users, and like I said, because it's more a group of average Joes targeting a hedge fund. But this is not indicative of some new paradigm in the stock market. This isn't investing; it's day trading and it's gambling. It's not going to change the dynamics of the market going forward. So I think that's important to keep in mind too.
So today we learned that certain apps like Robinhood aren't letting people trade, these retail traders trade several of these stocks, but the hedge funds and others could still trade. Do you see that as being dangerous? Some are allowed to freely trade a stock and others aren't?
I think when it comes to regulation, it's always a slippery slope as to a new policy that gets implemented and who it applies to and who it doesn't. And it's interesting because we were kind of having the same conversation with Twitter and Facebook and some of the other social media access platforms as it pertains to politicians. So yeah, I think it's a big deal. I'm not in a position to say it's right or it's wrong, but I think whenever there is a suspicion or a concern about the market being manipulated, the regulators are going to take a look at this. So you can see why things are happening, but I don't know that these are going to be permanent policies. And I think the regulators and the companies themselves, like Robinhood, are still they're flying by the seat of their pants a little bit, and they're probably still figuring out specifically what they want to do and what they need to do.
The stock market's always been seen as that kind of that last bastion of free market. Everyone has an opportunity to get in, to get out, to make money, to lose money. But certain people aren't being allowed to do that right now on the platform that they trade stocks on. Like you said, this isn't something that we foresee as a long-term issue, but do you see that as an issue for right now for people that are invested in these companies?
I think it's I think it matters insofar as what a platform like Robinhood or other similar types of companies are going to become. I mean, these are ways of investing that are still relatively new to the market in the grand scheme of things. And you double that with our very unique situation that we're dealing with in this country with people working from home, people being at home, having more time on their hands, technology allowing them to coordinate from remote locations. And it just evolves in certain ways that aren't necessarily predictable. So I don't know that it's problematic, but I think it's just a reminder that technology can evolve quickly, and that we're never sure what's going to happen until it actually does.
Do you think the rules were changed a little bit because Wall Street was getting it handed to them?
I don't know if that's the case. I know Jerome Powell, who's the chairman of the Federal Reserve, was asked about, if they had their eyes on this yesterday, and I think Janet Yellen, the new Treasury Secretary, was. It's so new and it happens so fast. I think it's kind of a wait and see approach. But again, I think it kind of comes back to when there's a concern of the market potentially being manipulated, and that may or may not have been the case in this sense. Then there's going to be concern and there's going to be awareness. Ultimately, a company's share price usually comes down to supply and demand. So whether the demand is there because the company is growing extraordinarily fast, or they have a popular product, or if it's just because a bunch of average Joes want to, punch out a hedge fund and see how much money they can lose, that demand is somewhat legitimate. So I think that's why it becomes a difficult question to answer. Yeah. When regulation might be needed and how much and who it applies to.
So GameStop was at 470 today, plummeted to 126, jumped back up to 310. I mean, that's a crazy roller coaster. Have you ever seen a stock move like that intraday? And kind of what does it tell you about how massive this thing has gotten?
About how massive this particular instance has gotten?
Just what's going on here.
Yeah, I mean, it's attracted a lot of attention. I think the media certainly is responsible for some of it. It snowballs, right? Once it's basically a stock market event or an investment that's become viral. And again, I don't think the movement in the share price has anything to do with the underlying company itself. It's more the attention and the popularity contest. So there are a lot of stocks that move extraordinarily fast. This is an exceptional circumstance. Again, I'm not drawing any long-term conclusions about what this means for the stock market or investing, or certainly not for the economy. It's a one-off event. Again, I think it makes for a good headline. I think it is a reminder too for a lot of investors that you can make a lot of money, but there's dangers too. So you really do want to be mindful of what's going on with a certain company, and ask yourself whether you're an investor or a day trader, which honestly is a little bit closer to gambling.
Yeah, exactly. That kind of leads me to my next question. Do you foresee this having any kind of implications long term, or for the people that don't trade stocks, who are long term, who are 401k? Does this matter to them, or is it a total blip on the radar?
I think it's the latter. Again, longer term, this isn't going to become a new fad or a new trend line for investors. I don't think it's something that you can necessarily even predict either. Corporate earnings are going to be a much bigger driver of performance, both for individual companies and for the stock market. The massive liquidity that's being injected into the economy from the Federal Reserve is a much bigger deal. The amount of government stimulus, fiscal packages that are put in place by Congress is a bigger deal. So in terms of the long list of things that are moving the stock market day to day, this is a lot closer to the bottom than the top. But that said, if you happen to own this particular company, it matters an awful lot.
So, a lot of people are pitting this as Wall Street versus Mainstreet, trying to take away some control from those massive hedge funds. Is that a good thing for the stock market? More control for the average person and the small person investing, that they do have some control, and it's not just the massive hedge funds that control everything?
Not necessarily. I think the stock market has performed pretty darn well, certainly for the last 12 months, going back to 2008 and 2009 for the last decade, and long term, performance has been very profitable, whether you're a hedge fund or an institutional investor, or just somebody who has, making monthly contributions into your 401k. So I don't know that it's better. Again, I think it makes for a good headline, but it's not something that's going to change the game or even necessarily change the rules going forward.
So when we look back at, oh, go ahead.
No, I was just going to say, one thing I'm kind of mindful of is people have a perception of the hedge fund as being a bunch of Wall Street fat cats. I wonder if the perception would be a little bit different if it turned out that that hedge fund among its clients had a hospital pension fund or a group of teachers' pension, let's say, that are invested, who now are suffering, major losses because a group of Reddit investors decided they wanted to do this. So not that there needs to be more morality in the stock market, but I do think sometimes the way it's perceived gets a little bit, it gives us tunnel vision. And, there's still, for everybody who's making money off of a trade, there's somebody on the other side who's losing. I do think when it comes to day trading and massive volatility like this, it's going to be ending badly for just as many people as who profit from it.
Yeah. So lastly, to wrap it up, if we do an interview in 6 months from now, and I say, Brett, remember when we talked 6 months ago about that craziness that happened with GameStop? What do you think the takeaway will be from all of this?
I think it's just the latest in a string of strange and unusual things going on in the world and in the stock market right now. I think it'll be memorable, especially for people who were involved in it or who decided to invest their own money in it. But I don't think it's going to be something that leads to a bigger effect in terms of regulation or in terms of drivers of the stock market. I think it's going to be much more of an exception.
Awesome. Really appreciate your time, Brett.
News Now from Fox will return right after this break.